Charles Schwab, Chief Investment Strategist Lizanne Sonders, who joins us on the phone. Lizanne, it's great to have you weigh in here.
Thank you.
We've been talking about the interplay between what Powell said, what the market heard, bond yields down, stocks breathing a bit of a sigh of relief. Did anything much change about the investment equation here?
Maybe not in the near term. I was surprised that after Transitory left the Lingo building a couple of years ago that it got let back in. I think that maybe was what the market rallied off of. I thought in terms of the dots, I thought it was the wider distribution that was interesting. You know, you had 8 dots that were for less than the 2 cuts that are still priced in right now. 4 for no cuts, 1 for 1 cut. You also had 7 of the dots believe that PCE is higher than the median, and you had 18 of 19 viewing there to be upside risks to core PCE inflation. So I think there's still going to be a lot of digestion of everything that happened today, what Powell said, what was in the dots, in the SEP, and in the statement.
Yeah, and I think the multiple acknowledgments of the inability to settle on how things are going to break with all these policy questions perhaps is the main takeaway. And it's not as if the Fed's pretending it has a handle on how these things are going to go. And, you know, we were just talking here about everyone is sharing these charts of the policy uncertainty index at record highs. And, you know, that both reflects an uncertain moment. But also, historically, that's when you kind of want to head to risk assets. I mean, do you think that's actionable at all?
Well, you know what? I think it was Jeremy Siegel with whom you were speaking to just before. I believe it was he who rightly pointed out that there wasn't a mention of what could happen after April 2nd. You know, with the fits and starts of all of these policies that are causing the uncertainty index to go through the roof, particularly the trade policy uncertainty index. We won't really have a sense of what this means, not to mention any additional retaliations. So I think that's the next important date to maybe put a little bit more sort of facts around this stuff right now. At this, we're all at the mercy of how we get the news and trying to judge what that means for short-term inflation.
Sure. The correction in the S&P 500 that, you know, maybe culminated in the short term late last week, you got 10% downside. It obviously was digesting this huge rush out of mega cap stocks. At the same time, we got some kind of an economic growth scare. Where does that leave us, in your view, Lizanne, in terms of, you know, the valuation, the kind of tactical setup for stocks right here? Did much get accomplished, I guess, with that pullback?
Well, anytime you have a correction, you do ease some of the valuation excess. I guess the rub for some segments of the market, inclusive of the Magnificent Seven, is you've had the numerator going down, but you've also had the denominator going down. Not in negative territory, but a year ago, the Mag 7's earnings growth was more than 50% year over year at a time when the rest of the S&P was low single digits. Now, based on consensus, that Mag 7 earnings growth is going down maybe closer to 20% by the end of the year, where you actually are getting a little bit of acceleration in the rest of the S&P 500. So as I always say, you know, better or worse can often matter more than good or bad, and I think it's the trajectory. But we did see a little bit of easing of those valuation concerns. Now we have to see whether the setup, given that estimates have come down for 2025 broadly for the market, but even those names, whether yet again the bar has been set too low and we have a first quarter reporting season akin to what we had for fourth quarter, which was too low a bar, 9.5% expected at the start of the season, 17% is what we ultimately got. I think that's the next important test for the market beyond this tariff stuff, is once we start getting earnings reports and what the outlook is for companies, especially with regard to profit margins.